In what is arguably the most credible and influential report in the South African bank charges, Finweek unpacked how the big four banks are treating their customers and some of the changes that they're likely to see in terms of product innovation. Now, leading financial journalist Bruce Whitfield and a team of independent researchers investigated this. And to discuss this further, I've got Garth Tennyson, Finweek journalist Bruce Whitfield joining me on the desk, and Joanne Du Plessis, head of pricing at FNB. Welcome to all of you. Bruce, I think I'll kick off with you. This has been something that you've been tracking for some time now.
It's a pet,
progress.
It's a pet project. So 2005, I look at my own bank charges, have a heart attack, recover in hospital after an extensive period of recuperation, and discover that we really need to do something on bank charges. And people before 2005 had tried to do lots of bank charges pieces and were slapped down by the big banks in South Africa saying, look, you're not qualified, you don't understand, you can't possibly do this. So in 2005, we got Deloitte to do the first ever Finweek, it was then Finance Week's bank charges report. They came out with a report in which FNB and Nedbank came out as the most expensive banks. FNB, through the biggest hissy fit you've ever seen, forced Deloitte to take out full-page adverts in the Sunday newspapers to apologise, which Deloitte did, and surprisingly the next year Deloitte didn't carry out the research. So we had to go and find alternative people to do it. Horwath Forensics, a small independent forensics team of two guys who'd come back from the United States, appalled by the level of South African bank charges, agreed to do it, for a small fee of course. So every year we've got chartered accountants who do this particular research using a particular format that we devised 8 years ago, and says there's a family, it has certain bank accounts, certain banking transactions, and that family has evolved over time. But what we've had is, since 2005, a consistent picture of what's happened to bank charges. And bank charges, like everything else, I suppose, the graph gets all wobbly, goes up and down. But generally, what we've seen over the last 8 years is a steady increase in bank charges until this year. Banks suddenly have got new ideas as to how they should treat their customers, which is great news. It is a breakthrough.
Perhaps, of course, why we've got Joanne here to speak on behalf of FNB, which came out as the bank with the least charges when it comes to individual transactions. I think that was Bruce. So what is your what is your view, firstly, on the accuracy of this report?
Look, I think we're delighted, obviously, to retain the position of being the cheapest within the study over the last couple of years. And I think, yeah, the accuracy, we're comfortable, we're satisfied that it has painted a good picture. And I think that the way in which it's been portrayed around how customers have adopted their banking behaviour is
I've got a
good.
bit of a problem with your mic now. I'm going to just throw it over to Garth.
Which is wonderful. I actually tinkered with her microphone just in case she said something horrible about the research.
Or was it ABSA or one of the other?
Here's an interesting point, because I tweeted a link to this particular story yesterday afternoon, in which I said, here's an extract of my latest bank charges research. And immediately, people's emotional response is, oh, I'm going to switch banks. I'm immediately going to go to FNB. It comes with a health warning. You bank differently to me, to Garth, to Joanne. We all bank differently. What we've done here simply is, over the last year, tracked one single particular profile, tracked the trends. So the trend has been, over the years, that FNB has gradually cut its bank charges, where all of the other banks have steadily gone up. And the trend now is that ABSA, in particular, acting massively aggressively, has gone in and has knocked, and I think this is going to upset Joanne, off the top spot as the cheapest bank when it comes to package options. And look, it depends on how you slice and dice these things. Each one of the banks will argue that if you stand on your head and whistle God Save the Queen backwards in the branch on a particular day of the month, that they can give you the cheapest banking. They will do that. Their press releases will come out over the next couple of days telling me what an idiot I am. I'm used to it. It happens every single year. Ultimately, though, we track trends, and the trends are showing broadly that banks are becoming a lot more aggressive in competing with one another. I'm glad FNB is off the top spot when it comes to the package options, because it shows ABSA, and to a lesser extent, Standard Bank, are paying attention.
There we go. So your mic's back up and running, Jan. So let's talk about that. Are you looking to take back that number one spot? What is your goal right now when it comes to bank charges?
Okay, I think, look, it's quite obvious that over the last couple of years, our strategy has been to reduce fees over time, and that, as you pointed out, we've been in that spot for the last 3 years. And I think we will continue to drive our customers to use the most profitable and obviously the most optimal channels in order to transact, and that will most certainly be a strategy that we will continue with.
Because one of the things that's evolved over the last 8 years is the use of technology. 8 years ago, very few people actually had internet bank accounts. The evolution of the internet, now mobile banking, has changed the way in which people transact. If you bank in the way you did in 1993 with FNB today, you are going to pay a huge amount because you're going to write checks, you're going to go to the branch and draw cash, you're not going to use ATMs, you're not going to use the internet. They are going to punish you for using old-fashioned banking techniques. That's been part of the strategy.
Absolutely.
Basically, you use the channels that are cheapest for us to manage, and we'll make it cheaper for you to bank. That's been the strategy.
I suppose,
right,
God,
yeah.
the problem is, people don't have internet, people aren't literate. That excludes a portion of the South African population.
I think another problem, I like to represent the sort of bad cop guy at home looking at this going, FNB may have won, but pretty much the worst of a bad bunch.
The best of a bad bunch.
Or the best of a bad bunch, sorry, excuse me. But the key for me is, and Bruce touched on it earlier, it's how you transact. The problem is walk into a bank, sit across the desk of a consultant and say, right, can you present me a package that will lower my bank charges over the course of a year?
And universally, the question the person across the desk will ask you is, how much do you earn?
How much do you earn? And here's a color-coded package for you. They can't give you much detail on that. And you get home, log onto internet banking, and at the end of the year, you've paid 4,000 or 5,000 rand for the privilege of drawing your own money.
So what are you doing from FNB's perspective right now to address the issue of making sure that those people who interact with customers understand how to sell the right product to them and not sell them a product which potentially is going to be more costly, and help them understand the variety of products available?
Right, so we communicate with our customers on a regular basis. So to address the first part of your question around what are we doing with the people that regularly interact, obviously communication is key. So we undergo some rigorous communication, particularly around our price review time, to try and help them to address customer needs. And
have you seen an improvement on that front? Are you able to measure that?
It's very hard to measure, obviously, unless you interact completely with your customer. But I think just the testimony of how many people are adopting our electronic banking methods, the take-up, for example, of things like our FNB app, people transacting via our online banking profile, and even the mobile banking. We've seen huge take-up in all of those. So I think definitely the message is getting across. And aside from your customer education or your frontline staff member education, we independently communicate with our clients in terms of reducing their bank fees. So if you transact within a branch, we will send you a message and say, avoid this fee in future, rather use this channel or that channel.
I think that's another thing, is the levels of service that you're getting relative to how much you're paying. And generally speaking, in my experience, the banks are not too good on the service front. I think your average middle class South African might be able to stomach paying a couple of grand a year for the privilege of having an overdraft facility, perhaps a home loan, internet banking that works well, a call center that deals with your problems efficiently and quickly. But generally speaking, I think the service levels do not match the fees you're paying, and that's the view of the average consumers.
And I accept, and I'm going to. You may fall off your chair at this point, but I'm going to understand where the banks come from a certain perspective. In that they're banks with 10 million customers. You can't have 10 million customers going to the branch and asking a question and expecting a tailor-made product service. You do that in ultra high net worth, private client sort of suites.
Who can afford to pay for that?
Who can then afford to pay for that privilege? But you're not going to get tailor-made banking products. But I would like to see the banking sector to provide product on what I need rather than what I earn. Because it's a vanilla product. You go in, you're sold a package based on what you earn rather than on your transaction needs. If you only do 5 transactions a month, what's the point of buying a bank package that gives you 25 free swipes on your debit card when you might not even have a debit card for it?
So there we go. Are you moving towards that? Because I just went onto FNB's website and I looked at, open up a check account with us, and straight away it was, distinguished by your income level.
Sure. And I think it is kind of what the industry is doing. However, we do have products and options that address that if you do not want the gold account or the platinum account and pay the fees that are associated with that. And of course, I think we need to remember that we cannot just isolate it on price alone. There's a certain level of value that customers are looking for and are prepared to pay for. But we do have products that will address your needs. If you want a no-frills, low-cost account, FNB does offer that, irrespective of your income.
Red rag to bull. Customers are prepared to pay for. Now, customers, unfortunately, in South Africa, got very limited choice. And we've got 4 big banks that offer a universe of products. Yeah, you can go to a Capitec, but then if you want a car loan or a home loan, you've got to go somewhere else for that. And FNB is increasingly making it difficult and is going through a process at the moment where it is testing whether or not it shouldn't be giving home loans to anyone but its own customers. So you're forced then to have an FNB current account if you want an FNB home loan. It's in a test phase at the moment. So we have very little choice in South Africa. So I take an issue with saying what customers are prepared to pay for. It's not what we're prepared to pay for, it's what you're obliged to pay for because there is so little choice.
Can the size of the South African middle class economy support more banking competition? That's quite interesting.
And that's an important one as well. I mean, the Treasury at the moment, Pravin Gordhan, the big call out is for inclusive banking. And banks are under a huge amount of pressure to make sure that somebody who lives on a farm in the middle of the Free State is able to access banking services in a not dissimilar way to somebody who lives in Sandton. So there's huge pressure, and almost Sandton or Claremont or wherever the is, Pinelands banking customers are supporting and almost subsidizing the creation of banking services to poorer South Africans. There is that cross-subsidization. So is it attractive for another big bank to come into South Africa and to compete? I don't think so. The only reason they would come here is because how Barclays came and bought Absa, because they can make lots of money.
Just looking at the international comparison right now, sitting in the holidays, sitting with some people from England, they were shocked that we pay for a bank account in South Africa. So that there's still that international comparison. Yes, there's the different market, and you talked about the fact that in South Africa you've got still a lot smaller market that has to support banks and of course supporting financial inclusion. But are we going to get to a point, are we moving to a point in South Africa where you don't pay for a bank account and you get all the frills, free insurance, free veterinary services or whatever?
Well, hold on a second, a pig just flew by. Sorry.
Is that a pipe dream, basically?
I think, it probably would be a pipe dream, and I think we need to consider that our market and our environment is quite different to the UK, which we regularly get compared to, just in terms of our population size, our demographics, the distance that people need to commute to get to places. So obviously we're trying to bring across solutions that help ease that effort required by the customer in order to the traditional coming into town to do your banking. So solutions like e-wallets, that type of thing, we're obviously trying to get into the more remote areas to help with that.
What I still don't understand, I think what most consumers don't understand is they'll acknowledge South Africa is different to the UK. Why does that mean we have to pay to draw our own money?
Pay to draw our own money?
Yeah, or
to withdraw.
Pay ridiculous fees to have a bank account.
I think it's just also the environment in terms of from a security point of view. Obviously the cost of cash for the South African environment comes at a price because of high insurance, high transport, regular cash heists, just the security that comes around that. But from our perspective, we've obviously tried to alleviate customers having to go into a branch. So we've introduced recently cash at all, and that comes free. We've dropped all fees for those transactions. So you can go along with your grocery shopping on a Saturday morning, and if you need to withdraw money, it's as easy as asking that cashier at that point in time for your cash requirements, and that's free.
Fair enough on cash. It costs money to transport cash. But if I transfer 1,000 Rand on my internet bank account, or 10,000 Rand, or 100,000 Rand on my internet banking account, I'm moving data from one point to another.
Right.
There is no movement of cash. Yet 100,000 Rand will cost me more than 10,000, will cost me more than 1,000 Rand to move. That is surely a substructure of economic segmentation. You can afford to move 100,000 Rand, you can afford to pay more.
Well, from a transfer point of view, that cost is no different. So online
So why does
banking,
it cost
that will
me more
not-
to transfer the money?
It won't on FNB's unlimited option. In fact, it's included in your fee, and you pay no extra fees.
Okay, but
for
if
that.
I was doing on a pay-as-you-transact basis, you would charge me
It's
more
a
to move
flat fee.
100,000. Is it a flat
It
fee
is
at
a
FNB?
flat fee.
Other banks do then charge.
Yeah,
do
there are
then
some that
yeah.
charge an ad valorem fee, but ours is it's a flat
Well,
fee.
I'm glad you've acknowledged that
Yes.
and changed it, which is
And
good. I think
of
that's
course,
important.
as time goes on and we point out these individual line items that you have to pay for, banks will have to justify it or it will fall away.
That's what's so much fun about doing this for the last 8 years. People are finally beginning to pay attention. Are we going to see further cuts in banking? Because my sense of it is that we've reached the bottom. There's going to be a little bit of jiggling, a little bit of argy-bargy, and a bit of competition between the big four banks, especially trying to compete for the top spot. But in terms of, we've reached a base?
I think it's hard to say now whether we'd see, but obviously from an F&B perspective, we're always looking to pass on cost savings to clients through, whatever economies of scale we can achieve. So we'll always be looking to assist customers to save on their bank fees, obviously if they transact in a manner that helps us to reach those economies of scale.
One aspect we must talk about before we end this conversation is the role of the regulator. What is your sense as to the impact that the market conduct regulator, which is coming into force this year, will have on banks and bank charges?
I think Bruce has got a position.
I have absolutely no idea what impact it's going to have. What I can tell you is historically what impact the interactions with between government, Pravin Gordhan, who has summoned the chief executives to the Reserve Bank, to the Treasury from time to time, and they said, look guys, your bank charges are too high, we need inclusive banking. There was the Jali Commission, which was under the auspices of government in 2000 and something, I forget exactly when. So that pressure, that there's state pressure, there's public pressure, there is media pressure, all of these things have come together in a series of official bank reports which just said, look guys, you make too much money out of your customers, you can't lean on your customers constantly, there's going to be a breaking point, and those pressures I think have been brought to bear. Also the fact that there has been a level of some increased competition where people have looked at market share, where FNB had stolen a march over the last 2 years. ABSA has looked at the reports of the last couple of years and has gone, we need to improve our standing because ultimately we're losing customers. Now it's going to be up to FNB to go up against ABSA and Standard Bank. Nedbank promised us they're going to come back with something in 2013. Let's see whether or not that's going to make a dent in the market. Nothing like a little bit of commercial argy-bargy to bring prices down.
So just if you could in 30 seconds,
Sure.
Are the regulators patting you on the back, or are they saying to you, the pressure's on and you've got to bring it back down a lot more than you have already?
I think there was in August a meeting with the key bank stakeholders, and they have acknowledged that the banks have definitely come a long way in terms of bringing down fees. So I think that alone is saying that they are comfortable that we are taking strides. Obviously not to say there isn't room for improvement. So I think, as I said, a focus for us is always, as long as we have happy customers and we can continue to grow relationships and keep customers and add value at the end of the day.